G'day folks, welcome to another weekly general update on the markets for the 12th of June. So just the normal disclaimers and important information on the fact that this is all general advice. So the action for the week, we saw the S&P 500 index close sharply lower for the second week in a row, so we certainly do have a correction of a little bit more substance. I'm still not particularly concerned by it. I think it's still reasonably controlled at this stage, but down for the second week in a row, so I think we're still looking for a little bit lower. We'll have a look at the charts in a minute, but we broke some key short-term support at 1282, closed below that on Thursday and Friday night, so we've not bottomed out yet in the S&P. The US dollar rallied hard over the last 3 days, which is one of the reasons that some of the gloss came off the actual stock market. Gold is flattening out, so I'm not quite sure where it's going short term. I still think the medium term trend is up, but short term we could pull back a little bit further. Silver was pretty flat on the week, but still looking for a bit lower yet. And the ASX 200, it closed lower on the week. And Friday was pretty disappointing, and that was really mainly in the banks. So we saw a rally in the banks on Thursday, spilled over into Friday morning, but it really lost momentum completely by the end of the day. And the monthly trend line has broken to the downside. That's still been sustained, so I still think we're looking for some lower levels there. So let's have a look at the actual charts. And we'll start quickly with a look at the US dollar index. So you can see there's our bigger picture, but zeroing in, we've had a substantial decline over the last 3 weeks or so since the 24th of May, but the last 3 days in the US, the dollar has bounced a lot more with concern over the US economy, meaning that people are taking their money out of what is called risk assets, which is the stock market, and putting them basically in what they perceive as safe havens. So that's the dollar index. Let's have a look at the S&P first of all on a monthly chart. So you can see here that June is now starting to shape up in the same way that May did last year. May was when we had that 1,000-point fall in the Dow in the space of about 5 minutes. But you can see it's still in very solid uptrend, and if by some chance this has peaked out, and I don't think it has, but if by some chance this has peaked out here, then we may get a month or two down, but then it'll rally back up again and form a double top or a lower low before it headed back down. So there's always plenty of time to get out, so don't be concerned in trying to determine whether this is actually the top in the market, as many commentators have called for. If it is, we'll see that unfold over the next few months, and we'll be able to adjust our position accordingly. But at the moment, I'm not seeing any real concern in the market. So let's look at it on a daily basis. So having bottomed out here at just around about the 1282 mark, I was expecting a bounce. We did get a bounce on Thursday, as you can see there. So I was thinking that maybe up into this 1300, 1310 area would have been ideal, and then it would turn back down again, but it went straight back over, which is a bit of a sign of weakness. So we've now broken this 1282 level, which was the 61.8% retracement of the run here from the 16th of March to the peak. So the levels that are now in play are 1248, and I think that's probably a likely level. Below that, we start to come into the retracement levels of this bigger picture, which is the rise from July last year, and the first level there is 1233. But I just think the way this is unfolding, that we may actually see 1248 to 1250 as being the bottom. You can see the S&P is significantly oversold on the daily chart, so the bounce is really due. Let's have a look at gold. Now on a big picture view, gold still in very strong uptrend, and frankly could pull all the way back down here to about 1430 and still be trending up. So we could lose another $100 an ounce on gold and still be trending up. Now, what I'm unclear about is we had a bounce, a bit of a retrace, another strong rise, but now it's flattening out. What I don't know is this rolling over and it's going to head down and retest these lows down here, or is this just a little pause, a little ledge, and will eventually break out to the upside? At this point in time, I really don't know. It'll depend a lot on the direction of the US dollar, and therefore it'll depend a fair bit on how the economic numbers in the US are perceived. So I think with gold at the moment, we don't want to be trading gold at the moment because I really don't know which way it's going to go. Now let's have a look at silver. So silver on the daily chart, we had this big plunge. We've now just gone sideways, and pretty much what you would normally expect is happening. We're now getting this triangle formation, which quite often happens after a substantial decline. It's like this is the rubber band is being twanged, and now this is the up and down bits that are getting less and less volatile. So definitely getting this triangle formation occurring. Now I think it's quite possible that we will break this trend line short term, and I'm really looking for somewhere between 33 and 35. So this little zone here is the area I'll be looking to buy silver. Now let's have a look at our main index. So the ASX 200, this is it on a monthly chart. You can see we also formed a wedge here on a monthly chart. We've dropped out of that wedge pattern now, so I still think we're going to get a little bit lower. Let's have a look at it on a daily chart. And again, I'd mapped out this bit of a bounce. You can see the index has had a habit of bouncing back below the previous low. So here we bounced back just to that previous low. Here it exceeded it. Here it exceeded it again. And I was looking for this to bounce up maybe to the 4600, 4620 mark and then down. But Friday, very weak as you can see. So not quite sure in the short term, but I think it's more likely that we're perhaps going straight back down. Certainly if our market was opening Monday, I think I'd be pretty confident that our index would be lower. But there will be another US trading session before our market opens. So we need to see what happens in the US session on the Monday night. Excuse me. Now we look at the finance index, so you can see bigger picture. We've got an important support level here at 4200. It's tried to rally a couple of days last week, tried to rally Tuesday and again on Friday and Thursday, but so far has been unable to get much traction. So I'm really thinking this index is probably going to head lower, and we're looking, I think, down here around the 4040 mark initially, which is probably another 5 or 6% off the banks before we start to see a bit more support. This is the materials index. So you can see we've got a short-term double bottom here. I'm thinking that we'll probably see the materials index a little bit lower, perhaps down here. Next is energy, and energy had been in a strong uptrend but has really dropped out of that now. We had this false breakout, it's pulled back into the trading range significantly. It's oversold a bit on the dailies, but not extremely so, so probably some more downside there. And finally on the indices, we'll look at the small ordinaries. So again, series of lower highs, lower lows. We formed a double top here, but we've now got new lows. So I think 25.59 is probably a given. and 24.97 is also possible. So I think some more downside in the small stocks yet. Okay, so we'll go back to the main part of the presentation. So just looking at some of the other charts that we take a look at, the copper inventory continues to power on up again. So copper levels again starting to look like they topped out and were turning over, and now copper levels have spiked up yet again. So that is a little bit of a concern, but as I've written over the last few weeks, I think there are signs that this lower level of copper buying is starting to run out of steam, and we'll see a resumption of the stronger imports into China, but certainly the chart is not looking fantastic. But amazingly, the copper price has held up pretty well against those kind of skyrocketing inventory levels. So some quite strange things going on in the copper market. So that held up quite well last week. This is nickel, and the nickel inventory is going the other way, so it's plummeting quite significantly, so you would be expecting the nickel price to be really powering, but in fact it's been weak over the last couple of months. So just the normal correlations are really just breaking down. The tin price chart has pulled back quite a bit. We're now off nearly $600 or $700 a ton from the peak. We've closed down below these previous peaks here in the early part of 2010. So it's likely now that we are going to retrace a portion of this rise from 1300 to 3400. So might see a bit more downside in tin yet, but it doesn't change the longer term supply and demand situation for tin. So overall our strategy still pretty much the same as last week. Short selling is still the bias, but we need to be ready to start managing our way out of those short positions, particularly the banks, over the next week or two. So we'll take our profits and reduce our exposure there, so we don't want to give back too much of our profit. Medium term, looking to sell the banks and the retailers and the steel stocks, so really nothing has changed there over the last few months. So we're looking to short sell the rallies. We can start to think about starting to rebuild in resource stocks, especially gold and silver, but we really want to be doing it on dips, and I really don't want to do too much in buying breakouts. And of course trading the ranges on the other large cap stocks as well. So that's pretty much the same strategy as we've had for a number of weeks. I see no reason to change that. And really at the moment, overall, you shouldn't have a large exposure because the risks just don't warrant it. It's not a time to be doing much buying, and it's not a time to be really massively short the market either, because we're getting closer and closer to a likely support and reversal point. So it's just a time to take the profit and wait for the opportunities. So that's it for this week. We'll talk again next week. Cheers.